What is going on, my boys? So in my last video I talked about what does profitable mean to you. If you have not watched that video, I'm going to link it to this video. You can go watch that. But I talked about what does profitable mean to you. To me, being profitable means I'm able to go into backtesting sessions, load up a session of the past month, of the past week, of the past 3 months, 6 months, etc. Complete the backtesting session and end the session in profit. To me, that is being profitable, because when I first got into trading, I was able to win trades on live markets. But if I would ever load up a backtesting session, it was never consistent. It was always a few trades here and there, and then I would lose, then I would get discouraged, then I would just full port, and then I would win that trade, then I'd be like, oh, okay, I'm profitable, and then I would think that I'm profitable. So to me, that's what being profitable means. And in this video, I'm going to be going over how I backtest for profitability, the things that I've changed in my trading to help me become more profitable, and also just some overall value, some sauce. So I hope that you find some value in this video. I've been backtesting last year, and I just want to say, so there's 4 things that I've changed in my trading, and 4 things that you should also consider in your trading journey. If you're not really seeing results, if you're not really seeing any progress, you're kind of questioning it all. So first things first is liquidity. Now this can be in terms of an uptrend or a downtrend, right? So you have lows here, then you have highs here, you have lows here, which is what typically people would define as retail traders. It's higher highs and higher lows. Now, in these areas, there is buy stops here and sell stops here. And smart money is going to want to buy these buy stops and move the price higher. Because if you really think about it from a retail perspective, people see price moving down, they sell, they put their stops right here, and they try to just, they try to hold for the whole year. Okay, that's the psychology behind it. So they put their stops there. So now these become buy stops, because whenever the market comes up here, it's buying back these stops and it's liquidating these people out of their orders. Same with sell stops. So whenever price is moving higher, in terms of manipulation, people are longing here or whatever, they put their stop there at the swing low, and they target, they go for crazy RRs. And then these are in the form of sell stops, because they're buying to get them out of their position. Market needs to sell those buy stops. So that is what moves the market. Sell side liquidity, right? This is sell side liquidity, which you can just mark on your chart as SSL. This is what I do. And then buy side liquidity, which you can mark on your chart as BSL. And then another thing that moves the market is gaps. So, what is going on? So let's say price moves energetically higher, and then there's this unfilled gap here. If we're not going for buy side and we're not going for sell side, and we have an unfilled gap, we could potentially see a move lower to fill the gap and then continue to price wherever price wants to go. So as you can see here on the 4-hour time frame, we have this gap. It's just jumping right at you, right? So we have this 4-hour gap here. And what do I mean by a gap? If you guys are not familiar with gaps, all a gap is a 3-candle pattern formation where the wicks do not overlap. So you can see this here. This would not be a gap because the wicks overlap. There's no gap here, okay? But here you can clearly see that there's a gap. So if price is not trading lower to take out new lower lows, it's coming back to fill these gaps. And this can also act as a condition. A condition is if this, then that. So if price comes up to this gap and respects, then we can anticipate price to come back for these lows. right? If price comes up to this gap and pushes through it, we can expect price to come for these highs. So this is like your condition. It can act as a condition. So sell side liquidity, buy side liquidity, higher time frame gaps, 4 hours, 1 hour is really the main ones. And another change that I've made in my trading that has tremendously improved my trading is, instead of trying to trade reversals, I've been trading continuations. And I've seen far more growth, far more profitability with the continuations, because when it comes to continuations, all you really need to understand is, are we going to go for buy side, are we going to go for sell side, or are we going to go fill a gap, which becomes your bias. And then once price confirms to you that it does want to go there, you just look for a place to enter and to put your stops where it's protected, and then you're just riding the trend to that draw on liquidity. As opposed to reversals. When it comes to reversals, right, and this is kind of where like a lot of traders, even myself, would fall into this idea of pattern trading, where you see we take out buy side, and then perhaps we have a gap here that we trade below, and then you enter here, right, going for this tremendous reversal, going for like a 1 to 2 maybe, and then price does start to move in your favor, but then it just follows the higher time frame trend. So for me, when it comes to reversals, it's almost like you're trying to guess more than really know. And when it comes to continuations, it's almost like you know that draw is going to get hit. Okay, so these are just like things that I've been using to really simplify my trading, and I have truly seen growth. As you can see, we're on this, like, I loaded up a fresh 50K account because I am on a 50K Top Step Futures prop firm challenge. So I've just been like, really studying and applying my knowledge to these sessions, so that like when it comes to live markets, it's just repeating what you're basically doing here, which is why it's really, really important. And I really, really emphasize and encourage you to not just backtest and go through the motions. Don't just look for these patterns and just like blindlessly try to take these. Don't fool poor. Like, truly treat it as if it were a live market. Truly take it slow and truly study what it is that you're seeing, because the more you do this over time, it's just going to be pattern recognition, and you're going to be able to really, really see these and anticipate these moves. Okay, so those are the 3 things that I've changed in my trading. Now, going back to the title of this video, how I backtest for profitability. As you can see, we're up $7,000 on this 50K account. Now, I would have passed the funded already. Like, the funded is like 3K before you lose 2K. So I've already shown myself, I've already proved to myself, and this isn't the only backtesting session that I've that I've backtested and that I've consistently passed over the 3K, right? Like, it gets to the point where it's just like, okay, like it kind of clicks in your head and you're like, all right, I got this. Like, I understand it. It's like a very complex psychological strategic game. And once you get it, it's like riding a bike. It's just the same thing over and over and over, right? It's not always going to be the exact same moves, the exact same trades, the exact same way, but it is always going to be the exact same logic, okay? So one thing I like to do when I backtest is I like to start on the higher time frame. And then when I go from the higher time frame, I look for my gaps and I look for my draws on liquidity, okay? And after I find that, I'll look for a 1 hour gap that is going to take us to that draw on liquidity. And then on the 5 minute, I look for displacement and confirmation that we do want to go, 5 minute, whatever, that we do want to go for that draw on liquidity. And this can also be a condition, right? So let's say let's say we're trading higher and we have this gap here and I'm bullish, right? I'm like, okay, this is the condition. If we trade lower and respect it, we can anticipate price to move higher. If we trade lower and through it, we can expect price to trade to sell side. Okay, so that it acts as like a condition, and that way you're not married to a bias and you can adapt fluently to the data that the market's giving you. So 4-hour time frame, I can see that we've been in a bullish uptrend. We had a time where we were disrespecting bullish PD arrays. Now, what do I mean by bullish PD arrays and respecting and disrespecting, right? So we have these gaps here, right? Bullish gaps. And then price comes into these gaps and we don't instantly trade higher. So at this point, I'm like, okay, we're no longer respecting bullish PD arrays. And in this same move, we formed a bearish sell side imbalance, aka a bearish fair value gap. And instead of going through it, we come to it and trade lower, and then we disrespect this gap, meaning we closed under it. So that tells me, okay, we are no longer respecting bullish PD arrays. We are respecting bearish PD arrays. So we are no longer bullish. So then we can see price had this move lower. We formed another gap here. And we traded through it. We closed above it. So it looks like we definitely don't want to go any lower. It looks like we are respecting these bullish 4-hour gaps. Okay. So now that you know, what is it respecting a bullish or is it respecting a bearish gap? Okay, because this is going to help you a lot with bias. So now that I know that we are no longer respecting these gaps, you can see here we didn't close above this gap, and in this gap we did, which means that this gap is not as strong as this one would have been. So for me, I'm going to be bullish on the day. So we have buy side liquidity here. You can clearly see that high. We have relative equal highs there as well. We have some more draws up here. And if we do want to go lower, we do have this low here. Okay. So that's that. And then you go to the 1-hour time frame. And now I'm like, okay, drawn liquidity is higher. I want to see higher prices. What is going to take us to those higher prices? Now I see this gap here, which we could potentially trade into whilst taking these sell stops and then trade higher. But we also have this bearish gap, 1-hour gap here. So like I would like to see us displace through this, retrace, and then take a trade there. Then I'm gonna go to the 5-minute, and I'm just gonna be patient. Gonna see what happens. Okay, so I want to see, are we gonna trade lower or do we want to displace higher? Okay, and one thing too, guys, like when it comes to winning, when it comes to like really like, don't define a win as making money. Define it as, were you able to come into the market, form an analysis, draw your draws on liquidity, your sell stop levels, buy stop levels, and does price actually go to those levels, whether you were in a trade or whether you lost a trade, and it keeps going to the draw? Because it really doesn't matter. It's more of like, this is how I approached it, at least when I first started backtesting. I was like, I just want to be correct on the drawn liquidity and correct on where the market's going. And then from there, I can build upon that and kind of find like your entry model and stuff like that. Okay, so at this point, we're just kind of chopping around. Does look like we don't want to go higher. We could potentially see lower prices into this 1-hour gap. So if I go to the 1-minute time frame, this is also a Monday, so I'm not really gonna expect too much. But at this point, guys, like, I see that it's chopping. I'm just sitting on my hands. Like, yeah, I can anticipate this low to get hit, but I'm not just gonna like enter and like, you know what I mean? Like, I'm gonna truly treat it and truly build my psychology with these backtesting sessions. So we can see we trade higher. So we were like consolidating, and now we've like broken out of this consolidation range. We have some highs here. Okay, well, let's just see. Do we trade back? And yeah, this is just chop. This is what you would call as bad price action. We're just like chopping around. It's not really doing anything. Okay, so in days like this, see, it's already 12. I would not take a trade in live markets past 12 p.m. So I'm just gonna go to the next day. Delete my drawings. Same thing. Okay. I'm gonna see. Okay. Did we respect this or disrespect this? It looks like we respected this bearish gap. So it looks like we are no longer respecting bullish PD raise. It looks like we do want to go lower. We have another gap here. Same thing. It looks like we might want to trade through it. If we do, we have this high here that we could take out. And if we want to respect it, we have this low, sell stops, and this low. Okay. So given the overall trend, if we invalidate this gap, then I would be bullish. If we respect it, then I would be bearish. Okay. So let me just go to the 1 hour time frame. We do have a gap here within this gap that we could we did not trade into it, so we could potentially see. I would like to see price trade through this gap and then come for these lows. That's what I would like to see. So I'm going to go to the 5-minute time frame, and I'm just going to see what the market does at market open. Okay, we're just consolidating. We have an extension towards this high. So at this point, based on the data that I am being given, this is telling me that price does not want to go lower. Because if we go back to the 4-hour time frame, we can see that we've pushed through this 4-hour sell side imbalance, aka 4-hour fair value gap. So in that case, I'm going to shift my bias from bearish to bullish with logic at the same time, so I'm not just like blindlessly. Okay, so we hit that buy side level. Oh my gosh. Okay, so we didn't get like an entry. We didn't really have any like gaps to retrace into. Like if we could have came down here maybe to this gap and then like traded higher, I would have taken a trade. But like I would still classify this as a dub, and I would still classify this as making progress, even if the account's not growing, even if I didn't make money. I would classify this as progress because I came into the day, I formed an analysis, I formed a condition. The condition was if this 4-hour gap holds and we push through this gap, then I would look for sell stops. If we invalidate it and we push higher, then I would look for these buy stops to get taken. We do have more buy side liquidity here that could possibly get taken out. Just what time is it? It's 10. I mean, we could still take a trade if we don't just jump straight to it. Okay, so we have a gap here. We trade into it. I want to see a deeper retracement, something like that. Now I want to see displacement out of that. Chop, 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 chop. Yeah, nothing really. This could be something here. We have a draw here and we have a draw here. For the purpose of the video, I'm going to take this trade. Before I take a trade on backtesting, I always go back to the higher time frame. Okay, so I'm like, okay, disrespect to this gap. We have an intermediate high here. 1 hour respected. Bullish, 5-minute. We have a 5-minute gap, traded lower and respected it. Okay, so this is looking good. And I would put my stop here, and I would target this high for a 1-1. I put my stop below this. Okay, and I would just go for a 1-on-1, and I would just let it see. I would take this slow as well. I would be like, okay, like slowly. I'm just kind of like, I'm not like zooming through it because I truly want to like learn it, understand what it's doing, and boom, as you can see, we hit that trade. So that was a nice trade. Not too bad. But just for the purpose of the video, I don't want it to get too long. I don't want to bore you guys too much. But like, I'm probably gonna do a video where I'm just like only back testing, and I'm like not really like trying to explain, trying to give you guys some value, and I'm just gonna like go through the motions, back test, and stuff like that. That way you guys can see after this video comes out. But I just wanted to make this video to show you the things that I've changed that have improved my back testing and improved my trading overall. The way I like to back test, I like to take it slow. I like to start on the higher time frame, analyze the higher time frame, and then align the lower time frame with the higher time frame. And the three things is just understanding where's the draw on liquidity. Are we going to go for buy stops? Are we going to go for sell stops? Are we going to fill a gap? And continuations. So instead of trying to trade reversals, right? Like we took this high and then trying to trade like all the way back down to this low. Instead of trying to trade reversals, you're just trading continuations with the higher time frame trend. And as you can see, it is a lot more, in my experience, based on my data, I've been a lot more consistent, a lot more profitable with taking it from this approach. So that's all I got for you today, my boy. I hope that you got some value from this video. If you have any questions, you can drop them in the comments. Let me know. Reach out to me. And yeah, see you boys in the next video. Peace.